Hey, it's Phil Spolstra here from the FarmOntario team, and we just wanted to get together with Ryan Parker here from Valco and discuss farmland values, where the market's heading, and answer some of the big questions that are going on in the marketplace right now.
Yeah, for sure. Thanks a lot for having me today. And yeah, real estate appraisal is what I specialize in agricultural and agribusiness properties. So feed mills, grain elevators, and of course all your primary production is kind of what I focus on.
So a lot of our viewers here will know you by your Farmland Reports that you put out every year. So tell us a little bit to start the conversation, what's happened in the last couple years.
Yeah, so it's been a study that's grown since about 2010 that I've focused on, and the last couple of years, especially this last year, some significant increases. When we talk about long-term rate increase, we usually talk in that 4 to 7% increase per year type of thing on a long-term rate. And this past year we were 25-26%, so that gives you an idea of kind of where we're at. That 2010-2012 period we were in that 20 to 30% as well. Kind of leveled off when commodity prices came back, but this last couple of years another major jump.
So I guess the point of the conversation we wanted to have today, a lot of questions we're getting from especially sellers and buyers, the buyers who have been frustrated with trying to find a property in a really hot market, is what are interest rates doing to the market? What is the market going to do moving forward here after such a stratospherical rise in values?
Yeah, I think we're in for a leveling off period at some point. The question is the timing of that, right? And so I think whenever you talk land values, whenever you talk agriculture, interest rates are a major thing, right? There's borrowing costs are a significant part of the equation. So Bank of Canada has started to increase those rates here recently, and I think if you look at term rates and what they've done since the start of the year, it's even a bigger increase, right? So a lot of times you get a lot of transactions in that fall spring time. So I think it'll be interesting to see what happens over the summer, but I think we'll really know what's going to happen when we get to fall, because the last two falls have been significant increases. So I think it'll be a little different coming this fall.
Yeah, are you sensing a shift already in the marketplace?
Yeah, I think there is. There's a bit of a sense of caution given where borrowing costs are going to be, right? And we're talking, 1-year rates of probably over 2 times what they were a year and a half ago, right? So I think that's definitely going to impact a lot of the guys who are looking to buy land, and especially where land values are at, right? The financing part of it is such a large part.
So you mentioned there's drivers to price on both sides. So what would you say the major tailwinds for the market that could maybe give us higher prices yet, and what are the major headwinds right now that might just slow our market down?
Yeah, so tailwinds, the easiest one to point to is commodity prices, right? So, anytime you have commodity prices at a significantly elevated level like we have now, and look like there's a fair bit of room yet for them to stay there, that's going to create a lot of demand for land, right? And so I think that's really going to balance off those interest rates for a time period. We'll see when that changes, but again, if you go back to that 2013 time, when commodity prices came down, land values leveled off. They didn't decrease, but they leveled off. And so if we had a time now where commodity prices were, say, 30-40% less than where we're at now and these interest rates, I think we would have seen a knee-jerk reaction much sooner. As far as headwinds, there's no doubt you have a few things, supply challenges and those types of things, and of course weather always plays a big factor here this spring, but interest rates by far are the biggest thing. The thing that's coupled with interest rates to keep an eye on is bank policy, right? So, does lending policy change, amortization and covenants and all those types of things, because those can also change if the industry feels a little bit of tension, and so those can have actually just as big impact as rates do.
Yeah, the government's been obviously making some moves to try and cool down a really hot market, and I think an important thing for our business is we do love to see our farmers making money and being profitable, so as long as those commodity prices are staying up.
Definitely. I think the other thing too to remember is from a government policy standpoint and a Bank of Canada standpoint, agriculture is not usually in the front row, right? They're thinking a lot about consumer spending and a lot about household debt, right, and residential prices. Yeah. So agriculture can be a benefit or not to those policies. Hopefully we're not taking these interest rates to a level which is unsustainable for the entire real estate market. That's really what we hope for, is it's just a kind of a soft landing.
Yeah, absolutely. We'd love to see the same thing. So in terms of interest rates, Ryan, they've obviously increased. The bond market's been pushing the long-term fixed rates up as well. Where are you seeing rates right now?
Right, so I think if we take 5-year rates, talking to a few bankers last week, it seems like we're hovering somewhere around that 4.5–5% for 5-year rates. And again, that's last week, so we could be up since then. That's just kind of how fast things are moving. But I think if we get 5-year rates into that 7% type type range. If we get 1 year rates at 5, I think that'll definitely caution guys into making, you know, the right purchases, right, at the right time. We're gonna go back probably to that time period where you're only buying that right farm, the farm you have to have. I think again, if you talk to most of the banks, by where we're gonna be mid-23, you know, it's gonna be quite a different change than we were, say, in 2020, 2021.
You're doing appraisers for clients and probably for a pile of different reasons. What are some of the main reasons somebody would call you to get an appraisal done of their farm?
So one of the main reasons, which again goes to the land value piece, is financing, right? So somebody's buying a farm, refinancing with a new bank or their existing bank, building a new barn. It's really a third-party valuation advice for the bank. Other instances, it's, you know, something that's really kind of growing, succession planning. It's always been an important thing in agriculture, but it's even more so now with the dollars and the expertise that's involved. Some of the other things would be estates, and then some unfortunate stuff, you know, shareholder disputes, divorces, those types of things. But
timeline-wise, when you're doing an appraisal, what's your turnaround when a client calls you to when you can have that appraisal done for them?
Usually we're in that, I would say, 1 to 4 week timeline, depending on the property. Depends on where the property is, what's there, of intensive buildings, how many farms, those things all come into play.
Well, thanks Ryan for the chat today, for answering all these questions, and we hope that was valuable information for you. We just wanted to direct you to our site where we have Ryan's Farmland Values Report. Thanks for watching today, and have a great and safe spring.